Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look in the gold market. In the recent few sessions it was really interesting what will happen on the gold, as we have monitoring the Jerome Powell speech in Wyoming, because it's, well, I think that's revolutionary speech, although it seems that market is underestimated the importance of this speech, and at first glance it's that nothing new has been said, because again, Jerome Powell is speaking about the long term of the zero interest rates, providing more liquidity measures, but still we think that this speech is revolutionary because it put the period of zero interest rates and liquidity measures in relation to inflation level and situation of employment market. That is really new approach to the Fed strategy, and it opens lots of questions on what will happen if Fed will not reach these levels for a long time, because we see the experience of the Japan that is struggling with the stagnation in the economy within the few decades and can't reach this level of inflation. Second is more practical question, is how Fed intends to reach these levels. Speaking on how and in general more details on the strategy, we should get, I suppose, in September. On 15th, 16th of September, it will be next Fed meeting where Jerome Powell probably will tell and open some nuances of this strategy. But in general, the things that he had said supports long-term bullish view on the market. There are some other moments exist that we discussed in the vehicle report, so I also think that could be very important. So if you'd like to, you could read it. But in general, this is really, well, it definitely gold-friendly strategy that should support long-term bullish trend on the gold for existing period on the market. The one thing that it's really come to my mind is that, well, on the last week we have taken a look at the forward interest rates. If you remember, this was the chart that's showing the 5-year forward rates. And it shows that within the 5 years, the inflation's forward rate stays at 1.7%. It means that at the current moment, market anticipates that within the 5 years, inflation will not reach the level of 2%. Of course, this is dynamic tool. I mean, the forward rates, they are subject to change, but at current market it stands so. The question is why Jerome Powell and the Fed in general needs to provide the strategy that probably will need only more than the 5 years ahead. Why they need to talk about it right now? The logical answer, if you use the common sense, suggests that probably Fed expects the rising on inflation faster and sooner than it's currently is priced in on the markets. And that may be something will be in the president's run period, because it currently stands the most curious president's run in the history, I suppose, at least in the modern history of the United States, that we have seen in the previous 2 or 3 decades maybe. So that's a few moments that really looks important. So let's wait for September and see what will be said on the next Fed meeting. Speaking on the short-term technical situation in the gold, recent CFTC data confirms our suggestion that we announced even 2 weeks ago, that sentiment on the market is changing. And this week's COT report shows that the more longs have been closed. Open interest has dropped for significant 45,000 contracts. This is really big move in favor of deeper retracement in the gold market. So that's what we see currently on the market. Hedgers also are closing shorts. It means that they do not suggest immediate upward rally. And it seems that the last week when we talked about massive openings as shorts as longs by the hedgers, that was mostly preparation to the Fed speech. Now one part of them are closed, while the long part, the part of the long position, still is kept on the market. So that increases the probabilities of the deeper retracement on the gold. That in turn put impact on our strategies that we should follow. If you'll take a look at the price action on Friday, you could see that market was not able to overcome the recent retracement here, mild downward action that has happened during the Powell speech. This means that we are not in stage of the new upward rally. So usually when the market comes out from the Fed speech and it keeps the same sentiment, same direction, it very fast shows rehabilitation after the Fed impact. But here we do not see it. We see the market stuck here after the Fed speech, although it mostly was friendly to the market. That makes us think that here, this is not a continuation of this upward action. That's just a pullback after this sell-off that we've got 2 weeks ago with this sell-off action. That in turn means that we should keep an eye on the possible downward continuation on the next week and watch for the next significant support area where we could consider again taking the long position. Nearest standing support stands around 1850. That you can see. OP of this ABCD in agreement with the confidence support. It's also 1.7 extension of the butterfly in 1820. That's a great area to consider taking the long position. That's where we might be going within the week or maybe 2 weeks. On the intraday charts, as we suggest that probably downward action should be reestablished, we need to estimate from what level it could happen. And here we have 2 levels, and their stands are actually very close to each other. Take a look at here we have the grubber, this bullish grubber, and this pattern suggests the taking out of this top that hasn't happened yet. It means that market could do it in 2 ways. First of all, it could complete minor A, B, C bottom pattern and hit the OP, completing the grubber, forming godless triple to sell around resistance 1972, and start downward action from this level. Conversely, we could consider this wider A, B, C bottom with the COP around 1997. Just $10 difference between these 2 targets. Once the COP will be completed, market could turn to the downward action. So this is our short-term scenario. Invalidation point of this scenario stands above this 1215 area. So if market 2050 area, if market will take it out, it means that at least it is going to the OP of this larger ABCD pattern that stands at 2055. So approximately here is at minimum, or indeed market turning up again. But currently on the background with the situation on the recent COT report, well, this scenario looks not very probable. So that's actually what we intend to keep an eye on the next week. So if you're trading on the intraday charts and you make the scalp trades on the gold and you're searching chance to go short, well, you could consider these 2 levels where theoretically the bearish reversal might happen. So that's what we see currently on the gold. Let's see what market really will show on the next week.